Okay, in chapter 7, we are working with special journals. Let's do a few problems to work with the application of those concepts. This first exercise we're going to work through is Yu Suzuki Company. They have a balance in their accounts receivable control account of 11,000 on the 1st of January 2010. That means in the general ledger, accounts receivable at the beginning of the year is showing a balance of $11,000. Subsidiary ledger contains three accounts. Smith with a balance of 4,000, Green with a balance of 2,500, and Koyan Company. This means is the general ledger accounts receivable shows that all the customers in total owe Suzuki Company $11,000. Subsidiary ledger is like the side ledger outside of the general ledger that shows the details of the balance in that control account. So of that 11,000, Smith Company owes 4,000, Green Company owes 2,500. They didn't tell us how much Koyan Company owes. Then during the first month of 2010, January, the following receivable related transactions occurred. These were the credit sales to each customer. These were the collections from each customer. These were the amount of the returns from only one customer, Green Company. We're going to figure out the first thing, what is the January 1st balance in the Koyan Company subsidiary account? If we know that the total amount owed by all customers to the company is 11,000, and we know two of the three customer account balances, we know that the fourth has to be the difference between the sum of these two balances and the total accounts receivable. That means if we take the total accounts receivable, the first, which is 11,000, and we subtract out the balances that we know, the balance for the Smith Company and the balance for the Green Company, total receivables minus two customers' balance means the third customer or Koyan Company's balance must be $4,500 on the 1st of January. Now, what is the January 31st balance in the control account? Control account started January with 11,000. During the month of January, these were the credit sales made to all customers on account. That means if we started with $11,000 in accounts receivable, when we made sales to the customers, we would have increased accounts receivable in the general ledger. Then, as customers paid us, we had collections, we would have decreased accounts receivable by the amount of the cash collections. So we increased accounts receivable by credit sales, we decreased it by collections, and we also would have decreased it by the amount of the returns. There were $3,000 in returns, meaning we would have decreased accounts receivable for the inventory returned by the customer. Accounts receivable is increased by credit sales, decreased by cash collections, and decreased by the amount of customer returns. We know that accounts receivable must have had an ending balance at the end of January of $13,000 in the general ledger control account. Now they want us to compute the balances in the subsidiary accounts at the end of the month. For Smith, we know Smith started with the $4,000 balance. Smith's receivable would have increased $9,000 for the amount of credit sales, and it would have decreased $8,000 for the amount that we collected from Smith, meaning Smith must have ended the January with $5,000 balance. Green would have started with a balance of $2,500, would have increased receivable by the amount of sales on credit, would have decreased the subsidiary account by how much was collected, along with a decrease for the amount of returns, meaning Green would have ended with a subsidiary account balance of $4,000. Then Koyan, we figured out here in A, started with a balance of $4,500 at the beginning of January. During January, had credit sales of $8,500, had collections of $9,000, leaving them with an ending balance of $4,000 in the subsidiary ledger. So if we add up the total customer balances in the subsidiary ledger, equal 13,000, which agrees with the balance at the end of January in the general ledger accounts receivable control account. Finally, which January transaction would not be recorded in a special journal? We have special journals for sales on credit. So all of the credit sales would have been recorded in the sales journal. All of the collections were done in cash, which means we would have recorded all of the cash collections in the cash receipts special journal. The only transaction here that doesn't have a special journal would have been the returns, which means that would have been recorded in the general journal. This next problem has us working with the cash journals. Which company uses the columnar cash journals illustrated in the textbook? So you may want to have your book opened to see an example of a cash receipt journal to help you work through this problem. In April, the following selected cash transactions occurred. For each one of these, we are going to be identifying which journal, the cash payments or the cash receipts journal, will be used to record the transaction and which columns in the journal will be used. So in the first one, made a refund to a customer as an allowance for damaged goods. That means we paid cash, we refunded cash to a customer. So this will go in the cash payments journal. So the journal will be cash payments. We'll obviously be decreasing cash, so we will be crediting cash in the cash credit column. And because it was a refund, it's going to go into other accounts. It doesn't fall into one of the other special columns in the journal. 2, we received a collection from a customer within the discount period. This is a cash receipt, so we will use the cash receipts journal. We will debit cash for the amount of cash received. We will be increasing our sales discounts because we are offering, or the customer paid within the discount period, so we are giving up revenues for the amount of the discount. So the discount amount will go into the sales discounts debit column to increase sales discounts. And accounts receivable will be credited for the full amount of the receivable. Purchase merchandise for cash. We're paying cash, so it will be in the cash payments journal. Cash will be credited because it is a cash payment, and we're going to be using the other account debit column because there is not a specific column for merchandise inventory, so it goes into the other accounts column. 4, we paid a creditor within the 3% discount period. We paid a creditor, we're making a payment, so it's the cash payments journal. Crediting cash for the amount of the cash paid. We're paying the creditor within the discount period, so we're paying off our liability. We will use the debit to accounts payable column to show a decrease to accounts payable. And we will use the merchandise inventory credit column to reflect the decrease to inventory for the discount taken. In essence, we are decreasing the cost of the inventory we have recorded. Number 5, we received a collection from a customer after the 3% discount period had expired. It's a collection, so we know it's going to be in the cash receipts column, the cash receipts journal. We know we are receiving cash, so we'll be debiting cash. And because the collection was outside of the discount period, there is no discount to record. Thus, the entire amount will be recorded in the accounts receivable credit column, decreasing accounts receivable for the amount that the customer paid off. Number 6, we paid freight on merchandise purchased. This was a payment, so it will go in the cash payments journal, crediting cash for the amount of the cash payment. And because there is not a specific column for freight cost or for inventory, we will be using the other accounts debit column. Number 7, we paid cash for office equipment. Again, it's a cash payment, so we'll be using the cash payments journal, crediting cash for the amount of the cash payment. And if there's not a specific column that addresses office equipment, we will need to use the other accounts column, debit. Number 8, we received a cash refund from a supplier for merchandise returned. We are receiving cash. It's the cash receipts journal. Cash will be debited because we are increasing our cash. And because it's a refund for merchandise we returned, there is no inventory account. So we will have, inventory account column. So we will need to use the other accounts credit column. Number 9, withdrew cash for personal use of owner. Cash was withdrawn from the business, so the business is paying cash to the owner. It will go in the cash payments journal. Cash will be credited to reflect the decrease to cash. And because there is not a specific owner drawings account, we will use other accounts debit to record the amount of the drawing. Finally, we made cash sales. It was cash sales, which means we received cash. We will use the cash receipts journal. We will debit cash for the amount of the cash receipt. The sale, we sold inventory, so we need to record the credit into the sales column. And remember, when we make a sale, we have 2 entries to record. Not only do we record the revenue being earned, but we also need to record in the special journal the cost of goods sold and the inventory being used up. So we debit the cost of goods sold expense column and credit the merchandise inventory credit column. One just summary here, all of these transactions have one thing in common. It's dealing with cash. And so what we're seeing is every one of these transactions affects a cash column because we're working in the cash journals. The journals for cash are either a cash payment or a cash receipt journal. All right, this last problem is working with Kentucky Company's chart of accounts. And they gave some of the accounts and their account numbers out of their general ledger. Please note that this is not all accounts they use. These are only the accounts that we need for this problem. On June 1st, the accounts receivable ledger of Kentucky Company showed the following balances. So these are the subsidiary ledger customer accounts. Moose & Son has a balance of $3,500, Chris Company $2,800, Cornell Brothers $2,400, and Mark's Company $2,000. The June transactions involving the receipt of cash were as follows. All right, so the very first thing we're going to do is journalize these above transactions into a cash receipts journal. The cash receipts journal will use the columns cash debit, and let me move this over a little. Here's our cash receipts journal. We're going to be using, didn't mean to do that, a cash debit column, a sales discounts debit, accounts receivable credit, a sales credit, other accounts credit, and here's our cost of goods sold, debit, merchandise inventory credit column. All right. Very first transaction. The owner, Kentucky, invested additional cash in the business of $12,000. So if the owner invested cash on June 1st, we are going to debit cash to show that the company received cash from the owner. And there is no column here to reflect owner's capital account, so we're going to use the other accounts credit column. On June 3rd, we received a check in full from Mark's Company less the 2% cash discount. Mark's Company owed us $2,000. They're paying us in full. We're not going to get the full $2,000 of what they owe because they're taking a 2% discount. That means that of the $2,000 that they owe, we are only going to get 98% of it because 2% is the discount. So we will only get $1,960 of it. So we will debit cash for $1,960. The full amount of the receivable is being paid off. So we need to credit the accounts receivable for the full receivable. and the difference of $40 goes into the sales discount debit column. On the 6th, we received check in full from Chris Company, less the 2% cash discount. Chris Company owes us $2,800. They are paying within a discount period. So of the $2,800 that they owe, they're only going to pay us 98% of it. We are only going to get $2,744 in cash. So we will be debiting the cash debit column for $2,744. Accounts receivable is decreased by the full amount of the receivable because they're paying in full. The difference between the cash received and the amount of the receivable is the amount of the sales discount going into the debit column. On the 7th, made cash sales of merchandise totaling $8,700. The cost of the merchandise sold was $5,000. Cash sales. When we sell on cash, we are going to be debiting cash for $8,700 and crediting sales for $8,700. Remember, when we make a sale, we also need to record the second entry involved with the use of the inventory becoming an expense. The merchandise cost $5,000. So we will also need to record the journal entry for a debit to cost of goods sold, a credit to merchandise inventory for $5,000. I want to point something out here. Notice that this is the first transaction we've recorded in the cash receipts journal. It doesn't have an account identified here. In the first one, we had to identify the account because we didn't have a specific account to credit in this column, in one of the columns. So we used the other accounts column, and we notated here the account being credited. In these two transactions, we had to identify which customer had paid us so that we know which customer's subsidiary account to update. Here in the transaction on the 7th, we did not have to record a specific account in here because we were able to use one of the specific columns, one of the columns here to record this transaction. All right, on the 9th, we received a check in full from Moose & Son, less the 2% cash discount. Moose & Son owed us $3,500. $3,500 is what they owed. They are taking a 2% discount. They're taking $70 off of what they owe. So we will be receiving only $3,430 in cash, debiting cash for that amount. We are crediting accounts receivable for the full receivable because the entire thing is being paid off. The discount needs to go into the contra revenue account. We have our sales discount column here, so we can put the debit right into that column. On the 11th, we received a cash refund from a supplier for damaged merchandise, $450. We received cash back, so we will be debiting cash for $450. We don't have a specific column to decrease inventory here. We can't record it in this column because this is both a debit to cost of goods sold and credit to inventory. And because we only need to credit inventory here, we need to use this other accounts column. Here we are notating which account needs to be credited because we don't have a specific column name. On the 15th, we made cash sales of merchandise totaling $6,500. The cost of the merchandise sold was $4,000. Here we are recording cash coming in as $6,500 for a sale, so we record the revenue earned. We also need to record every time we sell inventory the second entry in our cost of goods sold debit merchandise inventory credit column. Finally, on the 20th, we received a check in full from Cornell Brothers. Cornell Brothers had owed us $2,400. There's no indication here that they took a discount, so they must not have paid within the discount period. So when we record this cash collection, from Cornell in the amount of $2,400 in the cash debit column. There's no discount to record. The full receivable is being paid off with no discount taken. Now we need to insert the beginning balances in the accounts receivable control and subsidiary accounts and post the June transactions to these accounts. So going down here, let me go down to the solutions here. Here is the accounts receivable controlling account in the general ledger. We were told in the problem that the beginning balance in accounts receivable was, well, they didn't give it to us, but we can figure it out because they started the month with, bear with me, sorry, get this expanded out. Started the month with $3,500 for Moose and Sons. We have $2,800 for Chris Company. We have $2,400 for Cornell Brothers, and we have $2,000 for Mark's Company. So we know we must have began the month with $10,700 in the accounts receivable general ledger control account. So here's our beginning balance. Then we need to enter the balances for each of those customers' account balances in the subsidiary ledger. So here is Moose and Sons balance of $3,500. Here is Chris Company's balance of $2,800. Here is Cornell Brothers balance of $2,400. And here is Mark's Company balance of $2,000. Now we are going to post the transactions into these subsidiary accounts. Looking here now, let me back up before we do this. What this problem is having us do is just deal with the accounts receivable control account and subsidiary accounts. They are not having us do the posting for all these other transactions. So I just wanted to make sure you understood that. We would have to record all these other amounts into the general ledger. The problem just isn't having us do that. We are only posting to the customer accounts. So for Mark's Company, we are going to be crediting their account $2,000. Going down to Mark's, here is their credit for their amount of their payment, bringing their balance down to $0. We also need to record a decrease to accounts receivable, but instead of doing it with every customer payment, we're going to wait and do it in total at the end of the month. Here's Chris Company's credit of $2,800. Here is the credit of $2,800, bringing Chris Company's balance down to $0. We need to credit Moose and Son for $3,500. Here we go down to Moose and Son. Here's their credit of $3,500, bringing their balance down to $0. And we have Cornell Brothers. Here we need to credit them for $2,400. Cornell Brothers, $2,400, bringing their balance down to $0. We are doing that at the time of the cash collection throughout the month because we always want to make sure the subsidiary ledger customer accounts are up to date in the event a customer were to call us and ask what their balance is. But we're going to wait till the end of the month when we post all of the column totals into the general ledger. So we only need to make one entry into accounts receivable for $10,700 at the end of the month. That brings the balance in accounts receivable down to $0. The final thing they have us do is to prove that the control account balance, the accounts receivable account balance at the end of the month, agrees with the subsidiary account balances. Pretty simple to do because accounts receivable ended with $0, and all of our subsidiary account balances ended the month with $0 as well. If the accounts receivable balance is $0, it should equal the sum of all the subsidiary accounts, and it is also $0. So we worked it out just right. Okay, let me